Sound check. 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 Can you guys hear me properly? Okay. Check. Shall we continue further? So, leverage with your question number 2. Okay. Let's proceed further. Now see. Everyone please tell me for 3. Capital RST. What is the capital structure? That the equity shares are of rupees 8 lakhs. Can I say what does it mean? Beta, that number of equity shares will be what? Beta, the number of equity shares is going to be 80,000. Then we have for 10% preference share capital. Can you please tell me if it is 10% preference share capital, what is the amount of the preference dividend, guys? Then at the same time, we also have your 12% ventures. Guys, what is the amount of the debt? 7 lakhs. And what is the rate? 12%. So can you give me the amount of the interest also? 84,000. Also at the same time, now you have your NPAT available. NPAT is nothing but 2,80,000 and that is given to you on post-tax basis. Guys, if NPAT is given on post basis, can we get an income statement the reverse way to get the other data also on yes or no? Yes, sir. And then you are also having your operating expense, your depreciation, beta 96 and which is nothing but 1.5 times of your EBIT. Your equity dividend paid is nothing but 15%. But percent on what? It should be 15% on 8 lakhs. Whatever is your equity. Take 8 lakhs and multiply that by 50. Your amount of equity. Okay? And then the market price of the equity share is given to you as how much, beta? That's given to you as rupees 23. So you are required to calculate your operating leverage and financial leverage, cover for preference and equity dividend. And then they have also told you that we are required to calculate your cover for this earning yield ratio, and we are also required to calculate your PE ratio, and the net fund flow is also required. My first step is we have to prepare always your income statement. How do you start with your income statement, everyone? We start with sales. Okay? Go to your notebooks and just down income statement. Write down income statement. And this income statement, how will we start, beta? Will be started with sales. Sales. From that sales, what will we subtract, beta? What will you get? Contribution. Then from contribution, what do you subtract beta? Fixed. What do you get everyone? From EBIT, what do you subtract? What do you get? From EBT, then what do you subtract? What do you get beta? Then from NPAT, what do you subtract beta? Preference dividend. What do you get? Can I say you will be getting your net profit for equity share? From net profit for equity shareholders, what do you subtract beta? Equity dividends. So ultimately, we left with your retained earning. Are you all aware about this income statement? Now give me the of what is. Now we don't have the amount of the sales, but actually what do we have is your amount of NPAT. What is the amount of the NPAT which we have, guys? 2,08,000. Start with your NPAT, which is nothing but 2,08,000. Now what will we do? We can actually go reverse the other calculation. If my EBT is 100, what's the tax rate, guys? They have given you the tax rate is 30%. Can you please give me your NPAT should be 70, guys? Come on, yaar. From 100, if I pay 30, then now give me this total amount. Very good. Have I already calculated my amount of interest? What is my amount of interest? So this is 84,000. Correct? Are you all convinced with this much part? Now also please tell me what is the amount of the preference dividend. The amount of the preference which you have just now calculated is nothing but what? 50,000. That is also okay. From 2,80,000 if I subtract 50, what will I get beta? 2,30,000. Then also please the amount of equity 1,20,000. Now can you give me my retained earning? Now if I go reverse, then what is my amount of EBIT, guys? 4 lakh. I have specifically told you that your operating are some times of your EBIT. Are of how much your EBIT beta? 1.5. Calculated. Yes or no? Yes, sir. What is the amount of EBIT which I have just now calculated? 4,84,000. Everyone please take 4,84,000 and multiply that by 1.5. 7 lakh. What is 7,26,000? Operating expense. Now in that they have to a certain expenditure depreciation which is 96. Can you please tell me depreciation of 96,800? Is this your fixed cost or this is your variable cost? Because depreciation. What's your balancing part, beta? Sorry? Barabar? This will be your. Now, my dear student, substitute. Further, come on, yes or no? Yes, sir. What is your depreciation every 96? At least I know that my depreciation, but 96. What is my variable cost? Like 29. And what's my amount of sale? That can be, can I say the difference between the two? How much is it? 12,10,000. Now I have my entire income statement. Don't need it, but 5 lakh. Hello, for leverage, I will 5 lakh 80,000. we have the entire income statement now available. So now will this help me to calculate what are going to be the other parts? Okay, have I prepared the entire income statement? Come on, yes or no? Yes, sir. I'm giving 5 minutes. I want you all to please, okay, and then please solve what are the ratios which are, okay, complete particular income. You already done with this income statement. You already prepared this working note also, beta. Now I want you all to out this for and make sure you all don't make start. Start solving. Calculate. Calculate OL. L. What should be what is going to be the formula for operating leverage? The contribution. What is the contribution, guys? I like 88. What is your EBIT? Sorry, 4 lakh? Give me this 1 point. What is the next one, beta? FL. Now, FL, there is a possibility that you all must have made a mistake. FL, is there any preference dividend in the question? We are going to use a bigger formula. EBIT upon EBIT minus preference dividend upon 1 minus time. The formula we are going to use. What is the amount of EBIT, guys? 4 lakh? 80? What is the EBT? 4 lakhs. And do you have your preference dividend? How much is that? 15. 50. Dividing that with what? 1 minus. What's the tax rate? Very careful, because here 1000 divided by point. Okay, so now be 4,80,000. I am going to divide this with what? 4 lakh 7142. What? From 4 lakh 8 divided by lakh 2570. $1.47. Hello. We are just following the. That told us that your EBIT is 1.5 times your operating. The EBIT and multiplied that by 1.5 times, I got the operating. And from that I decided whatever is my fixed cost and whatever is my variable cost. Based on that, we have done the calculations. So basically your FL is also done. What's the next ratio which they have asked you to calculate? Preference dividend coverage ratio. Have you calculated this preference dividend coverage ratio? Give me preference dividend coverage ratio. Your preference dividend coverage ratio is dash upon dash. NPAT by preference dividend. What is the amount of NPAT? What's the amount of the preference dividend? How much times is it getting covered? 5 point. You got this answer? Then what will be your equity dividend coverage? That should be net profit for shareholders divided by equity. What's the net profit for 2 lakh? I will divide that by equity. What is the equity dividend? Lakh? Then what's your next ratio? Earning yield ratio. Guys, we have discussed what is earnings yield. Earning yield ratio should be your EPS by MPS. 200. So, you have EPS. EPS should be net profit for equity shareholders divided by number of equity shares. What is the net profit for equity shareholders? 2 lakh. What is your number of equity? How much is this? 2 point. This is your EPS. Once we have got the EPS, and we also calculate your PE ratio. What is your PE? MPS by? Do I have the MPS? How much is my? Do I have my EPS? How much is that? 8.8 times. Can I say with this we are done with your earning yield ratio, P ratio, this coverage also we are done, OL and FL. Now one way going to be your net fund flow. Can you please tell me what is net fund flow mean? Coming in. So is the profit something which is going to come in the yes or no? Yes, sir. But while calculating profits, you always subtract depreciation. But one last time, please tell me depreciation, cash expense. Have you paid depreciation? You have not paid it. Then can I say that for net fund flow, you have to take your NPAT and add the amount of your depreciation. Because can I say NPAT add depreciation actually the total money which is coming in the business? Come on, yes or no? Yes, sir. And from this now I have to subtract my total dividends which is being paid. Whatever is the dividends which is being paid, I need to. So can you please tell me my NPAT was how much, beta? My NPAT was like 8, correct? 280 was my NPAT. What was my amount of depreciation? Can I say this is the total money which is coming in the business? NPAT at depreciation will give me what? The total money which is coming in the business. And from that now I need to subtract what is the amount of the dividends. What are the amount of the dividends which I need to subtract? Can I say that will be preference as well as your equity dividend? Can you give me preference and equity dividend total? 1 lakh 7. 2 lakh. This is going to be my net fund. What is the total going to come in the business? The total is going to be NPAT plus depreciation. Can I say this question also covers your entire calculations, your leverages also along with your coverage also and with your fund flows as well. Now, my question number 3. Acha. Now see, question number 4 is very easy. We are just required to calculate OL, FL and CL on the data. Very much. Now there is one concept of margin of safety. Now my dear students, in leverages, just remember that operating leverage is 1 divided by margin of safety. Leverage, guys, 1 divided by margin of safety. So if I have my margin of safety available, what is the margin of safety which is given to you? 0.2. If I take 1 divided by 0.2, what will I get, beta? Operating leverage. This operating leverage is 5. Similarly, here also, can you all just check what is the margin of safety, beta? 0.25. I can take 1 divided by 0.25. Give me 1 divided by 0.25. This is called as my. So now my dear students, whenever the margin of, when I say 1 divided by margin of safety is actually going to give me dash. Operating leverage, come on, yes or no? Yes, sir. So I want you all to put your notebooks and first calculate this operating leverage and then try and calculate Just calculate this. What is operating leverage? 1 divided by margin of safety. Just write down this. Leverage is divided by 1 divided by margin. You have calculated the operating leverage, guys. Okay. Now, come to this. They have told you that we are required to prepare income. The format of income statement. Less. What do you get? Less. What do you get? Less. What do you get? They given to you tax rate? Yes. What will you be getting? Tell me that. Have your interest amount available. 1000 and the tax rate is 45%, 45%. On 100 rupees, 45 will be paying tax, 50. Now please tell me, you have interest available, come on, yes or no? Yes, sir. And you also have FL available. Everyone in one voice give me the formula for PIT upon, what is the FL? The FL is 4 is equal to, can I write down equity as PIT minus interest? Can I do that? Write down EIT upon EBIT minus interest. So what is the amount of interest? What is the amount of interest? 3000. Will this data help me to calculate your EBIT? Come on, yes or no? Yes, sir. So this will be 4x minus 12,000 is equal to x. So what will be your x, beta? 12,000 divided by 4, 3,000. On here. And if I've got the amount of EBIT 3000, there is a mistake. 4x minus 12,000. Okay, so this will become 3x. Okay. And this will now be 3x upon this. So this is going to be 4,000. Now, is my amount of EBIT 4,000? Come on, yes or no? Yes. This is 4,000, this is 3,000, this is 1,000. This is 450, this is going to be 550. Now, do I have operating leverage in the question? Yes. I have just now calculated operating leverage by taking 1 divided by MOS. Can I say this is going to be 1 divided by 0.2 and which is coming as 5? What is the formula for operating leverage? Contribution upon EBIT. Operating leverage is 5. I don't know what is the amount of my contribution, but at least I know what is the amount of EBIT. What is EBIT, guys? 4,000. 20,000. I substitute here 20,000. What is the amount of my fixed? What is, do I have PV available on yes or no? Yes, sir. How much is the PV ratio? 25%. So what is the formula for PV ratio, guys? Contribution by sales. Okay. Contribution by sales. Now, do I have the contribution available? Yes or no? Yes, sir. What is the PV ratio, guys? PV ratio is 25%. 25 is equal to contribution I got is 20 upon sales into. Can I get the amount of my sales? Also going to. What is my variable cost going to be? Now, this is the income statement. Right? I have prepared it for one company. Fatafat start with the second company and for sales. Okay. Will you be able to do it? Start. Same OL. OL we calculated above, no? What was the OL we got, beta? OL which we got was 4. First, just complete this much. I hope you all have completed this much part. Have you completed OL? Now, this was the income statement. So how we calculated the EBIT when the interest was given to you? That basis we calculated. Okay. That's how we got this particular answer. Now I'll show you the question. Are you all ready with the income statement? What is the amount of the sales coming next? What is the amount of your variable cost? This is coming as income statement. Your sales should be coming as how much, beta? Your NPAT is coming as 5. Are these the answers which you all are getting? So this was regarding margin of safety. Now, fine. Leverage, I think we have covered the regarding your, have we covered the OLFLCL, yes or no? Yes. We have also pertaining or percentage change, PIT and percentage, all these things. Now, my dear students, one pertaining to your segments. Tell me one thing. For any particular company, necessary that the company finance, the company will finance from one source or multiple sources, beta, multiple finance from from preference shareholders, from debentures, right? From all these sources, the company is going to raise finance. You all agree with this? Multiple. Now, when you raise the finance from debt, what do you have to pay to your venture holder? Interest. You pay interest. When you take the money from preference holders, what do you have to pay them, beta? Preference dividend. So guys, after make the payment of the fixed commitment to the venture holders and to the preference, can I say the balance amount which is remaining, that belongs to whom, beta? Can I say owners? That is nothing but the equity shareholders. Come on, yes or no? Yes, sir. The next question, next solving is regarding your segments. How return on equity and how are we going to do it that? What are the different, sources which the equity is going to earn? Just focus very. I want you all to come to this particular question to you that the net sales of A Limited is how much? Rupees 30 crores. The earnings before interest and tax as a percentage of net sales is what? 12%. Everyone please tell me what's the amount of sales, guys? Amount of sales is nothing but 30 crores. Okay. Now please tell me next, what is the EBIT percentage, beta? 12%. If I multiply this by 12%, what is the amount of EBIT? Can I say that's nothing but 3.6 crores? You all agree? Now from EBIT, what do you subtract? Interest. What do you get, guys? Come on, fast. EBT. Minus what? Tax. What do you get? NPAT minus what? Preference dividend. What do you get? Net profit for. Can you all please tell me that they have given to you that the capital employed comprises of 10 crores of equity, 2 crores of preference shares and 15% debt. Is there any debt in the capital structure? Come on, yes or no? Yes, sir. Now let us calculate the amount of interest. How much is it coming? 90,000, 90 lakhs. From 3 subtract 90 lakhs. What do I get, beta? 2.7 crores. What's the tax rate, guys? 40%. Can you give 1 point? They're going to be 1.6. Can you give me the amount of preference dividend? What is the amount of preference dividend? 13% of 2 crores. 26 lakhs. This is going to be 0.26. 0.3. Can you give me ROE? What is the formula for ROE, beta? Net profit for equity shareholders. Equity shareholder funds into 100. What is the net profit for equity shareholders? 1.36. If you look at the question, what is the amount of the equity? 10 crores. So this will be 13.6%. One very question. This ROE of 13.6 necessary that the company only earned from their own fund? Then the answer. After you make the fixed payment of preference share, after you make the fixed payment of interest, balance part which remains, it belongs to whom, beta? It belongs to equity share. Do you all agree with this? Okay. Your ROE is 13.6. Check that. How the company is earning segment. So they can earn ROE due to what? Debt, preference shares and equity. Their own. Can you all please tell me what is the amount of EBIT, beta? 3.6. Can you please tell me what is the capital which is? Can I say capital employed is nothing but 10 crore of equity, 2 crore of preference shares, 6 crore of debt. Give me the total. What is the return on capital employed? Can I say return on capital employed is EBIT, which is 3.6, and capital employed is 8. How much is this coming as? 20%? Correct? Is this coming as 20%? Come on, yes or no? Yes, sir. What was the amount of debt? Debt is 6 crores ka 20%. The EBIT which you are earning. What is 6 crore ka 20%, guys? 1.2. Preference shares. Can you give me preference shares? Preference shares. How much is the preference shares? 2 crores. 2 crore ka 20%. You are earning 40 lakh. From equity 10 crore, you are earning 20%. That is nothing but 2 crores. Overall, you are earning how much? 2 plus 1, 3, 3.6 crores. Is this 3.6 crore earned from one source or from three sources? From EBIT, what do you subtract? What do you get? EBT. From EBT, what do you subtract? Tax. What do you get? EAT. From EAT, what do you subtract? Preference dividend. What do you get? Net profit for equity shareholder. Question they have asked you, calculate ROE and indicate segments. Segments means what? You have to find out the breakup. That how much amount we have earned from equity shareholders, how much amount we have earned from debenture holders, how much from preference. Now please tell me, for debenture, are we going to pay any interest? Come on, yes or no? Yes, sir. What is the interest which we are paying? 0.9. So I have paid 0.9. Tell me 1 point minus 0.9 will give you 0.3. What is the tax rate, guys? The tax rate is 40%. So 0.3 ka 40%. How much is this, beta? 0.12. This will be 0.18. Do you pay any preference dividend debenture holder? It's going to be 0. Preference share capital. Do you pay any interest or you pay preference dividend, beta? Preference dividend. What's the tax? 0.4 into 40%. 0.16. Can you give now? Is 0.24. Do you pay preference dividend? Come on, yes or no? Yes, sir. What is the amount of the preference dividend? 0.2. So give me net profit for equity shareholders. 0.02. It's going to be negative. Now from equity shareholder, can I say on 2 crore if I pay 40% tax, then this is 0.8. This is now going to be 1.2. If there is no preference dividend, then this is also going to be 1.2. Total this up. 0.18 minus 0.02 plus 1. How much are you getting? 1.36. Now just check. Trying to make you understand. What is your net profit for equity? What is the net profit for equity shareholders? Can I say you are earning this 1. Presence of debt, preference shares and equity. And in preference shares, actually you're not earning. There is a loss. There is a loss of what? 0.02 lakh. I hope you are trying to understand. In this particular case, you are not actually earning anything from your preference share. So if any one source you want to close as a fund, then preference share. Segments. Calculate ROE and indicate its segments. So have we calculated the segments? Come on, yes or no? Yes, sir. So I just want you all to copy this segment. Answer na, or this is very tricky. Just complete Check. So have you all got the answer? What is the basic breakup? Or prepare the breakup of that return. Presence of differential or equal. Chalo, you all completed this much now. If I come to now the study module part, there are some now leverages are the first illustration. They are required to calculate the leverage. The second part also very much manageable. The in this question also illustration we have sales cost, we have fixed cost, and we are required to calculate OLFLCF. Acha guys, is there any preference shares? Is there any in this question? Is there any preferences or no preferences? Beta, no preferences. Financial leverage will be a smaller formula or bigger formula, smaller formula. So we have to for now. There is one mistake. Return on investment. What is the formula for EBIT upon capital employed? By mistake, they have taken as ROE. Examination. Whenever we are talking about or return on investment, that should always and always be what? Beta, can I say it should be EBIT upon capital employed into 100? Come on, yes or no? Yes, sir. It should always be EBIT upon capital, not anything else. Chalo. Was the on whatever we have discussed, practical problem. Acha, margin of safety. Have we done this particular question? Right? Operating leverage and this question bit after now we are in the now let us start with your next chapter. Now I am first starting with capital, okay, and then I will do cost of capital. Okay, chalo. Now everyone pay attention. Fine. The video clear, everyone? Fine, student. Fine. Now I want everyone to focus properly, huh? See, capital structure actually means this chapter now divided in one is normal capital structure and capital structure theory. Calculate capital structure, M approach, NOI approach, NI approach. All these things are going to come here. You are aware about that or not? But capital structure. First part is we are going to learn how to select a particular particular plan. Now please tell me that, think that the company only received one proposal for, then the answer is company has multiple sources from which it can raise. When I say company can raise the capital from either only equity. Come on, yaar. Okay, Shriram, pay attention. Suppose you have to raise 1 lakh rupees. Can you raise 1 lakh rupees entirely by equity? Come on, yes or no? Yes, sir. Then there is also a possibility that you can raise this 1 lakh rupees by taking 50,000 equity, 50,000 debt. Come on, yes or no? Yes, sir. And then we can also raise this 1 lakh rupees by taking 20,000 equity, or by taking preference share capital 80,000 also. Come on, yes or no? Yes, sir. Or also it can be a combination of debt and preference share. So can the company raise the capital from one source or multiple sources, beta? Multiple sources, right? And when the company is raising finance from multiple sources, it will select a financial plan in which what should be maximum. Can I say EPS should be maximum? And if suppose the P ratio is given to you, then we will select the plan in which the market price per share is maximum. Okay? So in this chapter, first we are going to learn about how to select a particular financial plan. We are going to learn about what, beta? How to select the particular plan. Then we are going to learn about how do we calculate the indifference point. And the third part is we are going to learn about how do we calculate the financial break. So this chapter is ideally divided into how many main parts, beta? 3 main parts. The first part will be dealt with how do we select a particular financial. The second part is going to be dealt with what is the meaning of indifference point. And the third part is what is your financial break-even. Please tell me, we will select the plan either on the basis of what? EPS, or either on the basis of what? MPS. We will select the plan in which EPS should be lower the better or higher the better, beta? Higher the better. Similarly, if EPS is available and if I have P ratio available, then can I say, can I multiply both the things and I can select the plan on the basis of what? Market price per share. You guys trying to understand this? Okay. So selection of the financial plan will be either made on the basis of EPS or on the basis of MPS. What is indifference point? Indifference point is that level of your EBIT in which dash is same, EPS is. What is indifference point? Indifference point means you can either go with plan 1 or you can either go with plan 2. That is called as indifference, in which the EPS is going to be what, beta? Same. And financial break-even point is that level of EBIT in which your EPS is going to be. What is break-even point? No profit, no loss. When I'm talking about financial break-even point, it means I'm talking no profit, no loss from equity shareholders perspective. It means your EPS should be 0. So now, how do you calculate your indifference? Indifference point means, can I say EPS of plan 1, this should be equal to what, beta? EPS of plan 2. Can you give me the formula of EPS? Can I say this is net profit for equity shareholders divided by number of equity shares. This is net profit for equity shareholders, which I'll divide with what, beta? Number of equity shares. Now, can you give me net profit for equity shareholders? Whatever we used to write down in the income statement, can we write down horizontally by taking EBIT minus interest? Guys, everyone in one voice, what is EBIT minus interest? EBT. EBT, if I multiplied by 1 minus tax, what do I get, beta? EAT. From EAT, if I subtract preference dividend, what do I get, beta? Net profit for equity shareholders. If I divide this by number of equity shares, what do I get? EPS. Can I say this should be equal to this, beta? Come on, yaar. Both the things should be the. Now, in indifference point, we have to calculate that level of EBIT in which your EPS should be the same. So can I say we have to take EBIT as X? Hello? We will take EBIT X and we will find out that EBIT at which the EPS under both the plans should be what? It should be. So this is the second part of the chapter, that is calculation of your indifference. The first part of the chapter was selection of the financial plan, and now the third part is financial break-even. Now what is financial break-even point? Where the EPS should be. Matlab we have to compulsory on that much level of EBIT in which your EPS should be. Can I put it like this? You have taken money from debenture holders, you have to pay them dash interest. If you have taken money from preference holders, you have to pay them dash preference dividend. So can I say at least I have to earn interest, at least I have to earn preference dividend so that my equity shareholders break even. Suppose my interest amount is 1 lakh, my preference dividend amount is 50,000 and the tax rate is given to you as 50%. Means you know what? At least I have to earn 1 lakh rupees for my debenture holders. Come on, yes or no? Yes, sir. At least I have to earn 50,000 for preference dividend, but that is after tax. So if I want to convert that into before tax, what do I have to do? I have to divide it by 1 minus tax. So I have to earn 1 lakh rupees for making the payment of tax and making the payment of preference dividend. So 1 lakh rupees for that and 1 lakh for interest. Can I say overall at least I have to earn how much beta? 2 lakh rupees. Only then my equity shares will break even. If I earn anything less than 2 lakh rupees, then can I say my equity shareholders will suffer a loss? Come on, yes or no? Yes, sir. That's why financial break-even point should be interest plus preference dividend upon 1 minus. What's the formula, beta? Interest plus preference dividend. Divide that with what, beta? 1 minus tax. That give you the financial break-even point. Come on, yes or no? Yes, sir. Now, financial break-even point is also measurement of risk. If the financial break-even point is higher, what does it indicate, beta? The risk is dash. The risk is lower or the risk is higher, beta? The risk is also higher. Higher the financial break-even point, higher is going to be the risk. Now, these are the three important things to be calculated. Now, we will solve this one question in which all these three parts will be covered. Okay? So, I want you all to please come to this for one. Let's read this. Okay? Adarsh Limited considering methods to finance its investment, and it is estimated that initially 4 lakh rupees will be. Okay, how much amount is required, my dear students? 4 lakhs. Okay, I need to raise 4 lakh rupees. Two alternative methods of raising finance is available. A part is issue 15% loan amounting to 2 lakh and issue 2,000 equity share of rupees 100. So can I say debt equity? That is the combination. Come on, yes or no? Yes. And second combination is what? Issue 4,000 equity share of rupees 100 each. It means we are going to raise the entire amount by the way of equity share. The appropriate tax rate is 35%. And assuming the EBIT of either 70,000 and 80,000, which financing proposal? Whenever you see a question on capital structure, guys, the first step is summary of. What do we have to prepare, everyone, beta? Summary of what? Financial. Now, please tell me in the summary of financial plans, there is plan 1, plan 2, plan 3. No, I think there are only 2 plans, plan 1 and plan 2. How much amount is required, beta? 4 lakhs. Yet, the total amount required is nothing but beta 4 lakh. In plan 1, can I say there is 15% loan amounting to 2 lakhs, beta? Hello? Are we taking debt of 2 lakhs? And the balance is by the way of what? Equity share. That is also 2. This together will give you 4. In the second plan, how are we raising the money, beta? Entirely by the way of equity. Is there any debt in the capital structure or there is no debt in the capital structure? Now, what are the number of? Can you give me the number of equity shares? They have told you to 1,000 equity. And here they have told you to issue 4,000. Is this how we are going to raise our 4 lakh rupees on yes or no? Yes, sir. Now please tell me, how will we see particular? If I take the EBIT of 70,000, there are two plans which, and if I take the EBIT of rupees 1,000, there are two plans which, what is the amount of EBIT, guys? The amount of EBIT is 70. Write down here, or I will write down 8. From EBIT, guys, what do you subtract? Interest. What do you get? EBT. From EBT, what do you subtract? Tax. What do you get, beta? NPAT. And is there any preference dividend in this particular question? No. So all the profits belongs to whom? Equity shareholder. If I divide by number of equity shares, guys, what will I get? EPS. Are you all okay with the format? Okay. Chalo, first plan. Is there any debt? What is the rate of interest? 15%. 2 lakh multiplied by 15%. What is the interest? 30,000. This will be 40,000. What's the tax rate, guys? Tax rate is 35%. Multiply this by 35%. 14,000. So your NPAT will be what, beta? 26. What are the number of equity shares? 2,000. What is your EPS? 13. In the second plan, is there any interest? This will be 70,000. What's the tax rate? 70,000 into 35% will be 24,500. What is this going to be? 45. What are the number of equity shares? Right? What? 11.37. Can you please tell me which? Plan 1 or plan 2? Why? Because here the EPS is lower or higher, beta? High. So, what I want you all to do is, tell me what plan should we select when the EBIT is, solve it on your start. There is no need for question. Why? Because, can I say already interest amount is the same? Tax rate also I have mentioned. Number of equity shares also we have mentioned. Which plan will you select when the EBIT is already calculated? Are we ready? Then EPS coming as 6.25 should be coming as rupees 13. Which plan will you select? Plan. Debt both. That capital tax savings on interest. This is financial. If suppose you are only taking equity as a source, debt equity, always debt equity, that particular plan will have dash, will have a higher EPS as compared to the plan which there is only. This concept called as trading, called as bolo beta, trading on equity. Okay, so always remember, financial concept is here that when there are plans, a plan which debt equity, plan which there only plan with debt equity. Why? Because of tax savings on interest. That is why we call that as trading on equity. Now, what is financial? It is that level of EBIT at which EPS should be zero. That is financial. And what is difference point? That level of EBIT at which EPS should be same. Please tell me, is 70,000 your indifference point? Is 70,000 your indifference point? Come on, yaar, yes or no? No, 70,000 is not your indifference point. Can you tell me why? Because can I say EPS is not the same? Is 80,000 your indifference point? No. Why? Because EPS is not the same. So can I say now I have to calculate that indifference point in which your EPS should be same? How will I do? Can I say that is possible with the help of the formula which I just now discussed? So what is that formula? Everyone, can you please tell me in one voice? We will start with what? EBIT minus what? Interest. What do we get? EBIT minus interest? EBT. Then can I say I'll need to multiply by 1 minus tax. Will this be your NPAT? From this, what will I subtract, beta? Preference dividend. What will I get? Net profit for equity shareholders, which I'll divide with what, beta? Number of equity shares. Can I say this should be equal to this? Arey beta, this is not a formula. This is income statement only which is presented horizontally. Beta. Into 1 minus tax minus preference dividend upon number of equity. So can I say let my EBIT be X? Because I want to find out that level of indifference in which my EPS should be the same. Please tell me, does plan 1 have any interest? Yes, sir. What is the amount of the interest? 30,000. So X minus 30,000. Okay. What's the tax rate? 0.35. Is there any preference dividend? What are the number of equity shares, guys? Can I say this will be X minus 1 minus 0.3 minus 0, I'll divide that by 4. If I calculate this, this will now become X minus 30,000 equal to X by 2. What is this going to be, beta? 2X minus 60 is equal to X. So what is this going to be, beta? 60. So what is 60,000? At level of EBIT of 60,000, can I say the EPS is going to be the same? Come on, yes or no? Yes, sir. Want to verify this? This is 60. Okay. What is the interest in the first case, beta? 30,000. This is now going to be what? 30,000. The tax rate is how much percent? 35%. So this is 10,500. So how much is this going to be, beta? 19,500. What are the number of equity shares? 2,000. If I divide this by 2,000, can you please tell me this will be what, beta? 9.75. Here there is no interest. It's going to be 60. What is the tax rate, beta? So 21,000. So will this be 39? And this divide by 4,000. So are you getting 9.75? So what does it mean, beta? It means that if you are going to earn 60,000 EBIT, then any one plan is okay with. Because indifference point is what? You are okay with anything. You are okay either with plan 1 or you are okay either with plan. So what is your indifference point, beta? 60,000 at which the level of EPS? So are you okay with the first two part of the particular? First one was selection of a financial plan, and the second one which we did was what? Calculation of indifference point. Okay, here the third part is financial break-even point. What is financial break-even point, boss? It is that level of EBIT at which what should be? Zero EPS. Now just look here and tell me, in plan 1, are we taking debt? Come on, yes or no? Everyone, come on, in plan 1, are we taking debt? Come on, yes or no? What is the amount of the debt? 2 lakhs. What is the rate of interest? 15%. So how much interest am I paying? Can I say at least I have to earn 30,000 rupees? If I earn anything less than 30,000 rupees, then can I say EPS will become negative? Come on, yes or no? So it is important that I have to at least earn dash. So can I say my EBIT should be 30,000? Come on, yes or no? Yes, sir. So my indifference point should be 2 lakh into 15%. What is 2 lakh into 15%? 30,000. Can I say at least I have to earn 30,000? Are you guys trying to understand this? Okay. In second plan, is there any interest? If there is no interest, so what does it mean? That can I say there is no financial break-even point? Even if my EBIT is 0, can I still say that the EPS will become 0? Come on, yes or no? Yes, sir. So what is financial break-even point? Interest plus preference dividend upon 1 minus. Okay, here there is no preference. That's why it's only interest plus 0. The second plan, there is no interest, there is no preference dividend. So everyone in one voice, please tell me, for an all equity finance company, the financial break-even point should be dash 0. And when there is a company in which there is debt equity both in the capital structure, then interest will be the financial break-even point. Come on, yes or no? Yes, sir. And when there is interest and preference dividend both, then both the things should. Everyone in one voice, if financial break-even point is higher, the risk is higher. Because okay. Now, I want you all to please come to your question, which deals with your this particular. This is relatively a bigger question, but cover so. Please come to this question. What is given to you? The following information of Tata Limited are presented. Do you already have the EBIT available with you on yes or no? Yes, sir. What is the amount of the EBIT, guys? 23 lakhs. What is the debenture interest which is given to you? 80,000. What is the rate? 8%. Can you please give me the amount of debentures? What is the amount of debentures? Come on. Obviously it is 10 lakhs, na? Because what is 80,000? Interest. What is the rate of interest? 8%. So what is the amount of the debt, everyone? 10 lakhs. So give me the amount of loan, long-term loan interest. This is 2 lakh 20 and this is 11%. Come on. 20 lakh. And then they have told you this is 20 lakhs and income tax is 10 lakhs. So what does it mean? In tax rate is how much percent? 50%. Now you got NPAT. Then you have number of equity shares. We have EPS, we have market price per share, and then we have. Guys, what are the number of equity shares? Everyone. 5 lakhs. What is the face value? 10. Can you give me equity share capital amount? The company has undistributed reserves and surplus. Guys, what is the meaning of undistributed? Retained earnings. How much is your retained earnings, beta? 20 lakh. So this is the existing data of the company. Can you please tell me in the existing data, do you have any equity share capital? Yes, sir. What is the equity share capital, everyone? In the existing capital structure, do you have any debt available? Come on, yes or no? Yes, sir. What is the amount of the debt? 10 lakhs. Okay. Then can you please tell me, is there any long-term loan interest also? Is there any long-term loans also available? Come on, yes or no? Yes. What is the amount, everyone? And you also have reserves and surplus. The amount of the reserves and surplus. Can you please? Can I say existing capital employed is 1 crore? Do you all agree? Okay, existing capital employed. Is it necessary company will always operate at existing? Can the company need further funds also? Come on, yes or no? Yes, sir. Look here, what is being. It is in need of rupees 30 lakhs. How much amount do you need? 30 lakhs. And this is to pay off the debentures and modernize its plants. Company wants to raise the finance, they want to redeem debentures, also at the same time they want to modernize the plant. It seeks your advice on the following alternative. Alternative 1, raising the entire amount as term loan. So option 1, how are we raising this 30 lakhs beta? Entirely by the way of dash, term loans. Okay. Can I say my plan 1, my summary of financial plans, I have plan 1 and plan 2. In plan 1, am I raising the money by the way of debt? Come on, yes or no? Yes, sir. What is the rate of interest, guys? 12%. 12% debt. And then, my dear students, what is alternative to raising part of the funds by equity shares and part by the way of term loan? So we are taking in your plan 1 entire amount of 30 lakhs by the way of debt. Okay. And in the second plan, how are we raising the funds, beta? Can I say we are raising the funds by debt equity combo? What is the combo? 1 lakh shares of rupees 20, 20 lakhs. And how much are we taking? Debt with the total of 30. Are you all okay with this much? Okay. How many plans do you have to raise this rupees 30 lakhs, beta? 2 plans. One, it is entirely by the way of debt. And second is by the way of combination of debt and equity. Okay. The company expects to improve its rate of return by 2% as a result. Everyone, what is your on loudly, what is the existing capital employed? 1 crore. Can you all please give me what is the existing EBIT? Come on, yaar. So 23 lakhs is your existing EBIT. And what is your existing capital, beta? 1 crore. What is your existing return on capital employed? But after expansion, will you continue with 23%? Come on. No, why? Because they have told you that there is going to be an increase of how much, beta? They have told you there is an increase of going to be 2%. Now this will be 23% plus 2%. How much is this? Okay. So when you are going to raise your further funds, then can I say you will be earning 25% due to modernization of plant? Come on, yes or no? Yes, sir. If no information is given to you, then before expansion I was earning 23%. After expansion also I will earn 23%. But here before expansion I am earning 23%. But because of 2% increase, can I say I am earning 25% after expansion? Come on, yes or no? Yes, sir. You have brains, please. What was your old capital employed? Come on, what's your old capital employed? 1 crore. Plus, how much is the funds required? Okay. So total you should be having 1 crore 30 lakhs. Barabar? But are we redeeming debentures? In this question, just check. Are we paying off debentures? Are we paying off debentures? Come on, yes or no? And if we are paying off debentures, what do you think the capital employed will be? debentures redeemed. Can I say debentures redeemed will be what, beta? How much is it? 10 lakhs. Because debentures are worth 10 lakh rupees. How did I come to know? See, debentures are 10 lakh. If I redeem it, then can I say 10 lakh rupees will be gone? So I'll be left with how much, beta? 1 crore 20 lakh. Now my new capital employed is it 1 crore 30 or 1 crore 20? Once again, was the company already having some loudly? Was the company already having existing capital? Alvar, what was the existing capital the company was having, beta? 1 crore. Is the company now raising new funds? How much is the amount? 30 lakhs. So total amount will be how much, beta? 1 crore 30 lakhs. But out of that 1 crore 30 lakhs, can I say that we are paying off the debentures? How much debentures are we paying? 10 lakhs. So what is the new capital employed? On 1 crore 20 lakhs, now will you be earning old rate or new rate of return? And new rate of return is what, beta? 25%. So if I multiply this by 25%, will I get the new EBIT? How much is that? 30 lakhs. This question is more advanced. In the last question which I did, I calculated indifference point, selection of plan and financial break-even. In this question, I am going to select a particular plan. But when I am going to select a plan, I need to check whether existing capital structure is given to you or not. Was the existing capital structure given to you in the question? Come on, yes or no? Yes. Existing are already at 1 crore, but now I need 30 lakhs. So I should actually have 1 crore 30. But what is happening with this? I am already redeeming dash amount, 10 lakhs. Now after redemption, I am only having how much, beta? 1 crore 20 lakhs. And on that 1 crore 20 lakhs, then I have to multiply it by 25%. So I'll be earning of 30 lakhs. You all okay with this? Okay, 30 lakhs. Absolutely clear this part. We'll be earning 30 lakh rupees. Come on, yes or no? Yes. Now we have to select the financial. How will we select the financial plan? So we have two options, plan 1, plan 2. Give me the format of the income statement. How do you start with the format of the income statement? EBIT. Minus what? Interest. What do you get? EBT. Minus what? Tax. What do you get? NPAT. Is there any preference share capital in this question? No. So this is net profit for equity shareholders. If I divide by number of equity, what is this going to be? EBIT. I should start with the EBIT of 23 lakhs or should I start with EBIT? Obviously after I'll start with 30 lakhs. 30 lakhs, come on, yes or no? Yes, sir. Now from this 30 lakhs, what I need to subtract is the amount of interest. Is the existing capital structure having some loans? Yes or no? Yes, sir. But in this, have I already paid off some loan? How much amount of loan have I paid off, beta? 10 lakhs I have paid off. So now how much loan which I have? 20 lakhs. So the new interest will only come on this 20 lakhs. What's the rate of interest which is given to you? 11%. Can I say 2,20,000 will be my old interest? Come on, yaar. That will come under both the cases. And new interest will only come in the plan in which there is going to be debt. This is 30 lakhs multiplied by 12%. 30 lakhs multiplied by 12% is how much, beta? 3 lakhs 60. Correct? And here the loan amount is how much, beta? 10 lakhs. 10 lakhs multiplied by 12% is what? 1 lakh 20. This will now be 2 crore 2 lakh 20 plus 3 lakh 60. Will be 5 lakh. One will be 2 lakh 20 plus 1 lakh 20. It's going to be 3 lakh. Correct? Old interest plus new interest, right? Because I already have some old debt available of long-term loan. Because I've just paid off your debentures. I've done nothing with the long-term loan. That interest I have to anyway pay. Okay? Can I say 30 lakhs minus 5 lakh 80 will give you how much, beta? 24 lakh 20. What's the tax rate which is? Will be what, beta? 12 lakh 10,000. 12 lakh 10. What is the number of equity? Number of equity shares is 5. What is this? Your EPS. Now what about plan 2? Tax, tax 40, 26 tax 6. And what's the tax rate? 50, 13 lakh 30. This is a very nice question, very comprehensive. Covers. And what are the number of equity shares, guys? Here the number of equity shares were 5 lakhs because there was no equity. But here can I say we are issuing equity? Come on, yes or no? Yes. What is the equity share which you are issuing? 1 lakh. And old shares was how much, beta? 5 lakhs. The total number of equity shares will now become how much, beta? 6. This if I divide by 6 lakhs will give what? 2.22. Which plan should you select on the plan 1 or plan 2? Plan 1 on the basis. What? They have given you one more condition. But the P ratio is likely to go down to 8 if the entire amount. Of course, are we raising? What, beta? Getting the market prices. Yes or no? Yes, sir. 0.4. 0.42 into 8. 2.42 into 8. 22 point. Which plan will you? The perfect example for understand that how yes, on the base of EPS which plan looks on here, but on the base as a C, maximize wealth of equity. Plan 1 or plan 2 bit. Very comprehensive. Covers everything. Total amount is available, paying off debts, calculate that, added 2% rate. Some part there was no debt, some part there was debt equity, both. Okay, Rahul. Then divided that of equity shares, we got the EPS multi P ratio. You have understood what? Acha. Because in first plan only they have told that the P ratio will down to take the entire money. Here, please, the first plan we are not taking entire amount loan. Yes or no? Right? But see, whenever a is investing in by subscription, why will he? So right now purchasing it at 20 rupees. But after expansion, the market price of equity share will become 20 or it will become 24. 24.2 na? The answer na? What was it? 22.2. So after, because this is what when the company will get the funds, they will start expanding. And this is the income statement before expansion or after expansion. So if you are a company, debt equity, I will take your debt. I will give you 20 rupees. Then you will expand with that money. And with that you will earn more EPS. And based on that, the market price will then become how much, beta? 22. Existing shareholders, who told you they are investors? So they might have purchased the share at whatever price. That was face value 10, but it is possible now that earlier they might be issued at any whatever. But see, you are concerned with what? As a CFO, what you should think is after expansion, what happens to your company's market price per share? Right now, what is the market price per share, beta? Can I say 20 rupees? If I'm raising the funds via plan 1, then what is the market price of equity share becoming? How much is it becoming? Huh? This is 19.36. This is market price per share. This is P ratio. You are thinking this is market price. This is PS into P ratio gives you MP. He is thinking this is 10 rupees. I told you na that MPS can be calculated by taking EPS into PE ratio na yaar. If I multiply that, the market price. Are you okay? You are a CFO of a company. Want the market price should be lower or it should be higher? So right now, what's the market price? What is the market price of the company? 20. After expansion, there it can be 19.36. Raise funds. Got it? Now this is a very good doubt. Asking why the P ratio? Can I say P ratio is indicator of demand? Why? P ratio is indicator of demand. Take more and more debt capital. Will it rise or it will fall? You are taking debt in the capital. That becomes risky, beta. If it becomes risky, what happens? Can I say when it keeps on becoming more and more risky, the willingness of equity shareholder will rise or the willingness of equity shareholder will fall? Depends, but here they have told you it is falling. In real life, now when you see companies which are very highly leveraged, some of the companies like Adani, some companies the risk is very high. I hope you are trying to understand. There still the P ratio is very high. Practically anything can happen in stock market. There can be losses also, there can be profits also. But P ratio, theoretically, when more and more risk is taken in the company, because willingness should fall. Chalo, have you understood this? Okay. In this chapter now only one last thing is. So in this chapter, first I have told you how to select. Solo yaar. Can we select the financial plan on the basis of EPS or we can select the basis of MPS? Point is clear. The second part of the question was indifference point. What was indifference? That level of EPS, that level of EBIT in which EPS was safe. Third one was what, beta? Financial break-even point. That level of EBIT at which your EPS is going to become 0. Are you all okay with this? Okay. Then we understood the questions, how to solve it. We understood the question, two types of questions. First, normal basic question. Second, advanced. If the company already has existing capital structure, company wants to raise further capital. Very nice question, you will not find it. Okay. This covers so many things. Now, also at the same time, I will explain last thing, relationship. Okay. Relationship between three things. Relationship between, I know the moment the word relationship comes, what is Sriram thinking? EBIT, reference point. Listen to this very carefully. Guys, at inference, can you select any particular? I'll tell you what. Harish, Brarish. Brarish. Mr. Ish, Mr. A. Everything. What is anything? Any favorite? Parota. Now, Ish and non-veg you don't like. Item. Or, acha, do you like upma? Upma is nationwide hated breakfast, right? No one likes it. Now, let's say, for example, Mr. Ish wakes up in the morning and upma or parota. Then what will Mr. Ish's choice will be? Parota. Because without saying why, because but if suppose there is parota and there is delicious bread, everything. Now that indifference point. Why? Because he is that there is both the options, the option are, you know what, both are favoring him. You don't have a choice. You are okay with anything. You are like, I am okay, you make whatever you want to make. Why? Because both are your favorites. So you are actually at dash, indifference point. You are actually at your dash. What is dash, beta? Indifference point. Or is very funny, huh? You are actually at indifference point. Why are you at indifference point, beta? Because can I say you are okay with selection of any one of the choices, yaar? Low. But if suppose see, I don't like, let's say, bitter gourd. You know what is bitter? Karela, Karela. Pava, Pavaka. One is Pavaka and one is bottle gourd. What is bottle? Loki. Whatever, okay. So let's say for example, if sometimes I get a choice that you want to have bitter gourd or bottle gourd, I am at indifference point. I am at indifference point. Come on, yes or no? Yes, I am okay with anything. You give me anything, it's okay. I'm not going to eat. Okay. But if suppose you tell me that there is an option whether you want to have, when you want to have, when you want to have, started visualizing also. And if you want to have, let's say veg, cheese, capsicum, pizza, and bitter gourd. What is your choice, beta? Of course, pizza, right? Not pavaka, okay? So, I hope you are trying to understand that select the financial plan based on. Now, tell me one thing. If your EIT equal to indifference, can I say you will select any plan? Hello, yaar. You will select. But what if your EBIT is greater than indifference? Means, you know what? You are planning to earn more than indifference. You are planning to earn more than indifference. Then, which plan should you know? You should select a plan in which the FBP should be lower or it should which FBP is higher. This will give you benefits of trading on. You all just told me na that trading on equity. Matlab when there is debt and equity both in the capital structure, this will give you better benefit. But if your EBIT is less than indifference, then which plan should be selected, beta? Select plan in which your FBP is dash, higher or lower. I'll give you solved our very first, in which what was the EBIT beta? Just check. What was the amount of 60,000? This was our indifference. At this indifference point, we were okay with any one of the Solu, we were okay with any one of the financial plan. Come on, yes or no? Yes. But if your EBIT is greater than 60, if your EBIT is greater than 60, plan you should select the plan in which your financial break-even point is lower, or it should. In plan 1 and plan 2, can you please tell me which plan has a, just look and tell me which plan has a higher financial, plan 1 or plan 2? Plan 1, because plan 1 has interest. Plan 2 ka financial break-even point is 0. Everyone please tell me, if my EBIT is greater than 60,000, which plan should I select? I should select plan 1, because in plan 1 FBP is higher. Just check now, we took 70,000 and we selected plan 1, because was 70,000 greater than 60,000? Come on, yes or no? Yes, sir. If 70,000 is greater than 60,000, we selected plan. 80,000, is it greater than 60,000? Come on, yes or no? Yes, sir. Which plan did we select? So what is the conclusion? Conclusion: when your EBIT is greater than, your indifference point, which plan should we select, beta? The plan in which the FBP is. And in that same example, if my EBIT would have, was that 40,000 lower than indifference 1,000? Come on, yes or no? Yes. Plan 1 or plan 2? And 2, because okay, so that's it. This, now we are done with your capital structure. I hope you all have understood in the chapter what are we going to do. I have touched all the concepts. Capital structure theories, I'll do it after cost. First of all, tell me, in capital structure, are we going to do selection of a financial plan? Everyone here, come on, are we going to deal with your selection of a financial plan? To select a particular financial plan, either we can select on the basis of EPS or MPS. If the P ratio is given to you, we'll always select on the basis of EPS or MPS. MPS should be lower the better, higher the better. Second part of the chapter was we dealt with how to calculate your indifference point. Indifference point is that level of EBIT in which EPS was, you are okay with anyone. And what is financial break-even point? That level of EBIT in which EPS is dash 0. You are okay with any one of the, no. In that particular case, EPS is 0. So that is why if your financial break-even point is higher, the risk is dash higher. Hey, financial break-even point is higher, risk is also higher, na? Because if financial break-even point is higher, we have to compulsory recover your dash interest. You have to compulsory recover your preference dividend. More the fixed obligation, more is going to be the. Then there was a relationship between you only. There was a relationship between EBIT, IDP and FBP. If your EBIT is greater than IDP, we should select the plan in which dash should be higher, FBP. If your EBIT is lower than indifference, we will select the plan in which what should be lower, beta? FBP should be lower. And when your EBIT is equal to indifference, you can select any. Capital structure. Now we are left with cost of capital and the capital structure. Of course, to give you break my head then, okay. This is 445 in. Then for 1 hour I'll read. Okay, and 6 I'll complete. So y'all are yawning a lot, so please have some tea. Okay. And then at 6. Okay, boss. I say 6 o'clock we'll do it. Not 6 o'clock we'll continue. I'll see you now in the next 50. Okay, online students, see you in 50.